Welcome to this special edition of Friday's Financial Fitness. As I shoot this video the night after the elections, an official winner still has not been declared for the presidential race. The latest CNN poll has Biden winning the president and Republicans maintaining control of the Senate, having what we refer to as a divided government. Perhaps by the time you watch this video, the president will be announced, and this will be old news, and the new news will shift to all of the other uncertainties we face as a country. Uncertainties related to when will we get a vaccination? When will the next fiscal stimulus be? What are the implications of a divided government and the continued debt we continue to accumulate as a country, and the uncertainties facing investors in this low interest rate environment? I believe we will continue to see more volatility over the next 3 to 6 months, but despite all of these uncertainty, I think our resiliency as an economy and as a country has been phenomenal during these challenging 2020 year, and I think there's a lot of reasons to be optimistic. As I reflect back over our 2020 year, our capital markets have worked extremely well. According to Yahoo Finance, through the end of September, the S&P 500 total return is up over 5.5%, and as a testament to the rapid expansion and innovation of technology companies, the Russell 1000 growth is up 27% this year. The Federal Reserve has continued to reiterate that it will do whatever it takes in their all-in approach to keeping our economy strong. This may have some long-term implications, but in the short term, it seems to be working. I'd like to give you 3 thoughts today as we are coming to the home stretch of the 2020 year. First, as we finish out the balance of this year and go into 2021, prepare yourself for more volatility as we hear more about the uncertainties surrounding the election, the economy, corporate earnings, the number of COVID cases, and a host of other items. But please, don't forget your long-term vision. I have mentioned several times, be careful about trying to time the market, as the markets tend to go up when you least expect it. According to Bloomberg, the best days in the market come when things look the worst. In the 25 years, 7 of the best 30 days occurred in March and April of this year when things looked their worst. Number 2, be prepared for low interest rates for several more years. When the Federal Reserve cut interest rates to near zero at the peak of the pandemic, all short-term fixed income was affected. The Federal Reserve cut rates to encourage banks to borrow more money and in turn lend it out to stimulate the growth of the economy. The Federal Reserve has indicated that they do not plan to raise rates until inflation is above 2% or unemployment falls to normal levels. We saw prior to the pandemic these normal levels. These low rates have forced investors to look at alternative investments to supplement their income. With the uncertainties of the economy in March, a record number of outflows from stock and bond mutual funds were invested in money markets as a safe haven. As indicated in my previous point earlier, missing the best days in the market may have a negative impact on the investor's return. And third, the impact of the pandemic on our economy has been devastating. This created the only non-fundamental recession as we intentionally shut down our overall economy. Coming into the pandemic, our economy, businesses, and consumers were in good financial shape. Through a massive policy response by the Federal Reserve and the government, the economy appears to be recovering, and at some point we may return to the new normal when a vaccination is approved. Then we may see a spike in activity, and interest rates and possibly inflation may move higher. In my 30 years as a financial advisor, I've seen the tech bubble of the early 2000s wipe out returns that didn't recover for years. I saw the financial crisis of 2008 and 2009 destroy the real estate market. And of course, this year, I saw an entire economy shut down due to a virus and send unemployment to the highest levels in American history. With every one of these uncertainties, we as a country have not only survived, but we've come out stronger and more resilient than ever before. My belief is this time is no different. So be patient and trust in the good old USA.